What's up, everybody? Good morning. Happy Friday. Welcome to the morning show here on Stock Market TV. In case you haven't heard, it is the best morning show in finance. I'm Spencer Israel, joined by JC Parets. Counting down the days, believe it or not, until Steve Strazza joins us back here stateside, if he ever just decides to come back. On the show today, Callie Cox is joining us. She is the senior investment analyst at eToro. She'll be on at 9 with her beach trade of the summer. We'll have Kimmy Sokoloff, as always, at 9:15. In between that, before, after, and around that, we got to talk about the Dow. It can't stop, won't stop. It gets a lot of shit from people like me, but credit to JC, man. He loves that thing, and it's working. It's working. So we'll talk about the Dow. We'll talk about the NASDAQ, too. Don't forget, if you trade such things, that NASDAQ 100 special rebalance is going to happen at the close today. So brace yourself for some fireworks there, potentially. We got some earnings. We got a short squeeze going on. We're going to talk about that as well. It's always fun. So strap in. That's the show. We'll talk about the hot corner. Talk about stuff you guys want to hit on in the chat. Smash the like. Let's roll.
Oh, Mr. Israel. Happy Friday, my friend.
Oh, I didn't even mention the fact that it's Crypto Friday, so we have some crypto charts. I forgot to mention that part.
That means a little extra orange on today's show. Is that why you wore that shirt there, Spencer?
No, it's more of a red. But yeah, Crypto Friday, obviously. So we do have
Spencer's just upset that crypto doesn't have any earnings season. So he's like,
Caesar mentioning yes, it is options expiration. What was the stat that I saw this morning? Like the largest options expiration. First off, every options expiration is the largest options expiration ever. It seems like, right? So I don't put much stock in that, right? It's sort of just the way options trading is becoming more and more popular, right? So it's just the way it is. But yeah, there's like some ungodly amount of notional value of options expiring today. Whatever. Crypto Friday, you want to do it?
I think we should.
All right.
Well, happy Crypto Fridays, everybody. This is a nice little tradition that started a few years back, kind of by accident. I'd schedule, meetings that we're talking about this stuff with different analysts and different data vendors on Fridays. I swear it wasn't on purpose. And, we've always done our Crypto Friday live strategy sessions on Fridays. So it kind of just became a thing. And, and also we'd have our internal analyst crypto meetings on Fridays also. So it kind of just became this thing. Shout out Louis out in New Zealand. Shout out Steve Strazza now in Hong Kong. He is having a very memorable experience. I spoke to him this morning. He's like, this analyst asked me for my autograph today. So the boys are having a hell of a time out in Hong Kong as we speak. One more country left. They got Tokyo, my personal favorite. I have a soft spot in my heart for Japan. I absolutely love it. So I'm super stoked for the fellas. And we will be bringing you some unbelievable footage and interviews from some of the top traders out in Asia. So shout out Sean, Steve Strazza, Giancarlo doing a heck of a job. Riley went out to meet him and everything. So very, very cool. All right. So Crypto Fridays, it's one of my favorite things to do. It's really fascinating. Cryptocurrencies trade over the weekends as well. During times when when it was altcoin season. Me, Strazza, Louis, Saturday mornings, Sunday mornings, things are moving. We're putting on trades on weekends. These days a little more quiet on the weekends. But my suspicion is at some point, perhaps maybe later this year, maybe next year, ultimately it's going to be altcoin season once again. And I'm looking forward to that. And maybe it's already upon us. Let's start with the biggest and baddest of them all. Here's Bitcoin. This is why I don't own any, just to be clear. remind everybody, I kind of spooked some people. They're like, JC, you really don't own any more Bitcoin? You know, I owned a ton before on the way up, and now here we are. And as long as Bitcoin is holding below this, 31,000 level, it's just not for me, right? We failed there 4 consecutive weeks. It's just not for me. Maybe we break out today. Maybe we break out next week. Now, remember, this was a decision I made last Friday. I was in the camp that we were ultimately going to break out things like Marathon and Riot and some other gauges, Coinbase and MicroStrategies. They were already ripping. So I'm like, man, it's very impressive considering Bitcoin hasn't even broken out yet. I figured it was going to break out, failed 4 weeks in a row. That was enough for me. So I'm just going to sit back, be patient. I have hardly any exposure. I'm an investor in a couple of hedge funds that have exposure in cryptocurrencies because that's the strategy. But I can't touch that money whether I liked it or not because I'm not the portfolio manager of those hedge funds. These are just investments that I made personally. Other than that, in my liquid stuff that I could do anything in the world that I want. I could go buy a Ferrari. I could go buy a mountain bike. I could go buy expensive wine. I can invest in cryptocurrencies. I could buy stocks. I could buy options. I could do anything I want with that money, right? Nobody tells me what to do. And I don't know any of this stuff, right? However, a breakout above 31,000, mortgage the house. Let's go. Right. So it's very binary in terms of the situation right now. And patience has paid off. Now, granted, it's been a week since I've been quote unquote patient. So I don't want to just talk about how, this could last forever. Maybe it does last forever. Maybe it never breaks out. I have no idea. But I'm not going to sit around waiting. If on Sunday this thing's holding above 31 and we could stick the landing, I will get back in happily. If it happens next week, if it happens next month, if it happens next year, whenever that happens, I'm going to get involved. 31,000. That was the support in 2020, 2021, end of 21. And this has turned into resistance all year. So until the market can prove that demand has finally absorbed all that overhead supply, Bitcoin is not my problem. And I think that there's a high volatility event on the horizon coming literally any moment now. Throw that up, Bonds. Here we're looking at the Bollinger Band widths. So this is, as the bottom panel there contracts and falls, that means volatility is contracting. As it goes up, that means volatility is expanding. And one thing that we know about the market, we know 2 things. We know asset prices trend. We know that. So if you're fighting trends, the probabilities are against you. So the way I look at it, if you're going to fight a trend, number 1, you better have a good reason. You better have a great reason. And number 2, you better have very well-defined risk management procedures in place if what you're trying to do is mean revert. For example, we bought PayPal for a mean reversion trade. We bought Tesla at the beginning of the year for a mean reversion trade. We bought Meta. It was the best trade I ever put on in my life earlier this year for a mean reversion trade. There's a time and a place for everything. So again, asset prices trend. And if you're fighting those trends, have a plan to get out when you're wrong, because most likely you are wrong, because that's just the math. But volatility mean reverts. When volatility is high, people convince themselves it's going to stay high forever. When volatility is low, it's going to be calm and, all is well forever. No, volatility mean reverts. So when you see volatility contracting in Bitcoin to levels that we've only seen a handful of time in history, my suspicion is we're going to get a high volatile event. And in that high volatility event, if prices react to the downside, I don't want to be in front of that freight train. I'd rather be buying on the way up. And I might have to pay more. I probably will have to pay more. And in that case, I'm okay with it. Think of it as kind of like a bougie hotel. You could cheap out and get a cheaper hotel. And the restaurant there, if they even have a restaurant, it's not going to be very good. You got to go to the nicer hotel for the good restaurant. Your room's not going to be very good. They're probably not even going to have room service. The wine list probably sucks. Like all of these sacrifices that you have to make in a hotel to pay less money versus being in a nicer hotel. You got the nice restaurant downstairs, maybe a couple of restaurants, great room service, awesome wine list. There are benefits that you get for paying a premium for a nicer hotel that you're not going to get by cheaping out in a cheaper hotel. Same thing in Bitcoin. You can own it below overhead supply and you're going to deal with the whipping and you're going to get a cheaper price maybe, but you're going to have to suffer the consequences. I'd rather pay more knowing it's on the way up and not have to deal with any of the aggravation. So I like that comparison to the hotel. And just so you can see those Bollinger Bands contracting themselves, this is the actual Bitcoin with those Bollinger Bands. Check that out. So you can see those Bollinger Bands. For those of you who might not be familiar with Bollinger Bands, it's a 21-day exponential moving average, right? Which is about a month of time. And then it's 2 standard deviations above and below. Is it 1.5 or 2? I think it's 2. 2 standard deviations above and below the mean. And that's what that is. I'm being confirmed it is 2. I haven't taken a technical analysis exam in 15 years or something, 16 years. So I forget the exact details. My wine exams, like this random river in France. Like I forgot, man. I don't know what to tell you. I haven't taken an exam in a long time. Nevertheless, we know what it means. It means that volatility is contracting, and from volatility contraction, we are looking for volatility expansion. Here's a good one. Shout out Alfonso, talking about the how long it's been since Bitcoin was at new all-time highs, consecutive days without making a new all-time high. And the current environment is very similar to what we saw in 2012 during that period, about 622 days without making a new all-time high. We're right about that now, right? We're nowhere near what we saw in 16, 17. We're nowhere near what we saw in 2021. Nowhere near those. But we're right to where we were in 2012, 2013. Really, really interesting. So there's precedent, in other words, is really what I have to say. And, and then, rounding off with the Bitcoin, whenever in doubt, zoom out, right? So throw up the Bitcoin and Ethereum chart there. And what are we seeing? We're seeing those key pivot highs at the end of 2017. This was when my, end of 2017, early 2018, my high school friends asking me which cryptocurrencies I should invest in.
Right.
Not whether or not they should invest in a cryptocurrency, but specifically which ones. I'll never forget it. I'm at my sister's apartment in New York City. I was still living in California at the time, crashing with my sis. I don't know what I was doing in the city, but I'm crashing with my little sister, and I'm getting these text messages in the middle of the night, and these guys probably weren't sober, right? Like I remember exactly where I was thinking, oh, this is completely over. Get out of this thing. And anyway, so we broke out after COVID, as you can see, to new all-time highs. And then a funny thing happened last year. All that former resistance turned into support, both Bitcoin and Ethereum. So from any kind of longer-term structural perspective, the trade has been, if we're above those former pivot highs, you can be long all day. Me personally, I like to be a little bit more tactical. I already have long positions, like I said, in some of my non-liquid investments that I can't touch anyway. So I'm in, not to the extent that I would like to be in for a monster run higher. Hence, why I had on such a large position that is now non-existent until we break out above 31,000. And then take a look at the NASDAQ Bitcoin chart. I think this says a lot. The correlation between technology in general and the NASDAQ has been very, very high and positive. You see a lot of green down there with Bitcoin, right? So, we've essentially treated Bitcoin and other altcoins like software stocks, right? Like they're just more tech stocks. You don't have to put these things up on a pedestal just because you need a different kind of account or wallet. Like that doesn't change the fact that these things trade like tech stocks, like software stocks until this year. And we just haven't seen it, right? Especially the last few months as technology and semis and AI this and all that stuff, they've really taken off. Cryptocurrencies simply have not. So the question is, do we get that catch-up trade from Bitcoin, like all the diamond hands, laser eye people keep telling me? Or does the NASDAQ come and correct and catch down to Bitcoin and Bitcoin's got it right all along? Or our correlation is just changing? I continue to think that we're going to get that breakout. Take a look at the Bitcoin and MicroStrategies chart. So this is the equities market. For those, some people, maybe institutions, tax-deferred vehicles. Throw up the MicroStrategies and Bitcoin chart there. Tax-deferred vehicles can't own Bitcoin or cryptocurrencies or open up wallets. If you're a hedge fund or institution in your mandate, you can't just go out to the metaverse or whatever and buy Bitcoin like you and I can easily do that on our phones. Certain institutions, the most powerful institutions, many cannot. And then we're already seeing MicroStrategy breaking out to new 52-week highs, suggesting perhaps that the stock market is already pricing in a breakout higher. Take a look at Ethereum. Ethereum still basing, hasn't broken out yet. Still waiting for that thing to really get going. It has not yet. Take a look at Solana, an interesting one, holding above 25. If Solana's above 25, I think you can own this one all day. 25 is the big level there. So if you're looking for altcoins, Solana was supposed to be like the next Ethereum, the Ethereum killer, and this and that. I don't know about all that. And a lot of people got their, as they say, their asses handed to them in that particular trade because there was just no risk management whatsoever. But if we're above 25, I think it's fine. Below 25, I think the risk is back to the downside. So keep an eye on that. Look at Ethereum Classic holding above all that support from last year. Really interesting, above 15. And I want to look at Matic above 70. So Matic, this is the Polygon. This is above 70. It looks good. And even the Doge, guys, even the Doge holding above 55 cents. If the Doge is above 55 cents, I like it. I like it from the long side. People just roll their eyes at this point about, the Dogecoin. It's like, oh, JC, are you serious? I can't with this Dogecoin. Let me tell you something a little about the Dogecoin. The Dogecoin is $10 billion in market capitalization. By definition, that would make it a large cap stock. It would make it one of the largest stocks in the world. And it is currently the 9th largest cryptocurrency, coming in just behind Solana, believe it or not, and continues to be ahead of Polygon, ahead of Polkadot, ahead of Litecoin, ahead of Avalanche, Bitcoin Cash, Shiba Inu, Chainlink, Stellar. All of those things, Uniswap, Cosmos, all of those things are worth substantially less than the Dogecoin. So say what you want. Whatever opinions you have clearly don't matter. If it's above 55 cents, I have absolutely no problem at all with a long position in the Doge. Right. So that is my sort of state of the markets of cryptocurrency. Spencer, before we move on, traditional asset classes, do you have any questions?
I do have questions. Can we go back to the time since all-time highs chart for Bitcoin? So
you like that one?
Based on, I do like that one. Based on where it is now, surely we are going to break that record, right? Well, I guess, yeah. Well, maybe not break the record, but let's see. We are 618 days, and the record is 1,100. So, all right, we would have to go another, basically 500 days, 600 days to break.
We'd have to go another year and a half.
Yeah,
to break record.
Yeah. Okay, all right, but never mind then, because my point was we're still awfully far away from the all-time high in Bitcoin. But
listen, it could be another year and a half before we break out. My suspicion is,
but Bitcoin moves so fast, though.
It doesn't. That's not what's going to happen. I think we make a new all-time high and head up towards 100,000. I think that's the move, but I don't know when that's going to happen, Spencer, because my crystal ball's in the shop. So, I have a strong feeling on the what, but we get paid to know the when, Spencer, because early and wrong is the same thing. I don't know if you heard.
I'm like you. I would rather be a little bit late, and be sure than be early and be wrong, right?
So you're going to pay more for the bougie hotel.
Yeah, I'll pay more for the bougie hotel.
There's nothing wrong with that.
In this analogy, also, some of these, altcoins you're mentioning, some of them honestly do have some kind of fundamental use case. We have no idea what they are. JC has no. I have no clue. JC has no clue. But there are fundamentals for not for Dogecoin, but for other stuff. There's real world use cases allegedly happening on these other blockchains. So I don't know. I guess just know that.
I want to throw something out there. I'm getting some pushback from Ravi and Mark telling me it's not 55 cents, it's 5 cents. Yes, it doesn't matter. Shiba Inu has 10 zeros after the decimal point before the first integer. So they're so silly in the metaverse that we're just gonna skip the zeros altogether and go straight to the integers. So sorry for that confusion. But that's how I think. Because remember, the y-axis doesn't really even matter, right? It's all percentages.
It's true.
It's all percentages. If it was a nickel, or if it was $50 or 5 cents or $500, none of that really even matters, right? Because it's just percentages. So sorry for that. It's just sometimes we haven't cleared some of that stuff up. So I hope that helps. We just skip all the zeros altogether.
I can't believe that Dogecoin is still the market cap is still $10 billion.
Isn't that a better idea? If you're in the Shiba Inu, I could be Spencer's oh, JC, what's the risk management level in Shiba Inu? Oh, Spencer, it is 0.000.
That's why I hate this stuff. That's why I hate it. I can't take it. I can't take the.
Okay, but fine. It's a very simple solution. You can either complain and bitch about it, or you could just delete all the zeros in your head and just go straight to the integer. It doesn't matter.
Yeah. Or not even look at the price and just look at the chart. Yeah.
Exactly. Come on, chat. Ravi, Mark, you with me on this? Doesn't that make a lot more sense, or am I crazy? Right? What's the difference?
Oh, is that true, Investing Henry? That Doge prints 1 million tokens every hour? I did not know that.
Well, then there
God
must be
damn,
more than 1 million tokens bought every
that's a
hour then, because
lot.
it keeps going up.
I don't understand. I never understood Dogecoin. It was started as a joke. I never understood it.
It was not a joke. It was a pivot. It was a fork. It was a Bitcoin fork.
Doge?
Yeah, Doge is a Bitcoin fork.
I didn't know that.
Yeah,
All
because
right.
these are open source codes, not to get down into the
Yeah,
weeds, but
whatever.
it's an open source code. You could literally just take the code and then just change it,
Yeah. All
right?
right.
And that's what Doge is. It's a
Well,
Bitcoin
all I
fork.
know is I own Bitcoin, Ethereum, and Solana, and I've never sold a crypto before. I've only ever bought. So,
Sorry
and
to
I've
hear that.
no, I'm up in my Bitcoin. I am down in my
You
down in my Ethereum and Solana, but
This
I'm
is
up
what
in
we
my.
call, folks, this is what we call anchoring bias. Don't do that, Spencer. You're better than that.
It's such a small slice. I don't worry about
How
it.
about a
Okay.
little state of the markets before we bring in Callie? A little state of the
Um,
markets quickly. You want to talk about the Dow, the most important index in the world?
I do want to talk about the Dow and the Nasdaq kind of together actually. So let's do that right now. Yo, what's the deal here? 9-day winning streak for the Dow Jones Industrial Average, longest winning streak in 6 years.
I like that little jingle.
What's the deal? This
Right?
thing
You know?
this thing can't stop, won't stop. Yeah, jingle's nice. What's
Why don't
nicer
you
is
throw up? Why don't you throw up? Why don't you throw up the Dow Jones Industrial Average? This is the most important index in the world. For those of you who don't know, I learned the hard way a long, long time ago. Don't fight Papa Dow. And you
That's
know
right.
what I used to do a lot of? I used to fight Papa Dow all the time. All the time. And that was a mistake. So we're looking at the Dow Jones Industrial Average here, putting in a monster base. And listen, what do they say? The S&P 500 is cool. The Nasdaq gets all the girls, but the Dow is for, what is it?
I have
That
no
old
idea. I
saying.
have no idea what you're talking about right now.
Listen, this goes back to the late 1800s, folks. This is not anything new. The Nasdaq 100 is not the stock market. The Nasdaq has 0.0% exposure to financials, 0% exposure to energy, 0% in
That's
materials,
not true.
0% real estate.
That's not true. The
It
Nasdaq.
is. It
No,
is.
no. There are
It
two
is.
energy stocks. I looked.
In the Nasdaq 100, it is a 0.0% weighting in the Nasdaq 100. It's 0.0.
There are two energy stocks. Diamondback is in there.
Diamondback Energy, excuse me. Sorry, it's not 0.0. It's 0.3.
That's a
Excuse
win for
me.
Spencer.
It's all right, Spencer. Anyway, what Spencer's doing here is reiterating my point. There is no energy exposure and there's barely any technology in any industrials. There's less than 4% industrials. There's 0.4% financials, 0.2% real estate, less than 1% utilities. You're getting 0.00% materials. So that actually is
I will
a
take it.
0.00. So nevertheless, the Nasdaq is not the stock market. The Dow Jones Industrial Average is going to give you all of the information you need. And if you're one of these people that is like, well, JC, the S&P 500 is 500 companies, 30 is not enough. All right, and maybe you're one of these people where you're like, oh, it's a price weighted index, JC. That's so stupid. Cap weighted is what the institutions look at. Well, why don't you zoom out and look at a chart of the Dow and look at a chart of the S&P 500 and overlay it over the last 70 years, and you know what you're going to find? They look exactly the same. So you might not like that the Dow moves exactly with the S&P 500, but it does. So you have the option as an investor to take a sum of the parts analysis and look at 500 stocks, or you could do it for 30 and come to the same conclusion. The bottom line is this: if you get these 30 stocks right, you get this index of 30 correct, you're going to get the rest of the market right. You may not like it, but it's true.
Did you see that tweet from Eric Balchunas yesterday about the Dow, about the DIA ETF?
I did not.
Oh, I'm shocked. You would love this. So
What did he say?
the Dow Jones ETF, I guess was incepted, if that's the word, in 1998. I believe 1998, and since inception, it has outperformed the SPY. The diamond has outperformed the SPY since inception.
Take a look at the.
If you can believe that.
Well, because the S&P, because the Dow didn't have all that tech exposure. So take a look at the S&P and the Dow, slide 1 there, folks. So for those of you who might not believe me and think that you're Mr. Cool Guy, like I used to be, by the way, I used to think I was Mr. Cool Guy managing a hedge fund on Fifth Avenue. Oh, I look at the S&P, blah blah blah. I was such an idiot. They move together, guys. So it's up to you. You want to do a sum of the parts analysis on 500 stocks, or do you want to do it, for 30? That's up to you. I like to keep my life simple. All good.
Freda is noting that Eric Bontrina's tweet may have been in the chart report. It may have been. I forget where I saw it. I just know I saw it somewhere. But yeah, I mean, look, you're totally right. They're correlated like all hell. Okay, like they move together.
Correlated like all hell.
Yeah, I just yeah. Anyway, but 9-day winning streak. It's not nothing. And against on a day where the NASDAQ just had its second worst day of the year. Not that that means a whole lot of anything, but what a 2% down day.
Well, the NASDAQ is 50% technology.
Yeah.
And with all the communication stocks, now you're looking at 75% of the index is all technology and communications. When you look at the Dow, it's less than 20.
Yeah.
So you're getting a lot less exposure there, and the leaders are outside of growth, so that makes perfect sense. Nothing wrong.
Yep.
Thing I wanted to mention, it's not that I don't look at the NASDAQ. It's not that I don't look at the S&P. There's a time and a place for all of them. We like to look at all of them, the Russell 2000, small cap growth, small cap value. We look at the value line indexes that are the median stock. Like, it's not like, oh, this one, not that one. It's not an or, it's an and. All I'm saying is that of all of those, I find the Dow Jones Industrial Average the most valuable because I learned a long time ago, Spencer, don't fight Papa Dow. And if you won't, I won't do it.
Yeah. I mean, look, you can't argue with an uptrend. I kind of like what Ravi just said in the chat. I don't know if I agree with it entirely, but I like the idea of it, right? S&P is a momentum indicator. The Dow is an economic indicator. I don't know if I like totally buy that, but like I kind of buy it.
S&P is a momentum indicator and Dow is an economic indicator?
I like sort of.
Absolutely not. Nope, not at all. Zero.
I see where he's going with that. I see where it's
hard no. Not at all. Quite the opposite. They are both indicators of the economy, because let's remember that the stock market is a discounting mechanism for the future, and the Dow and the S&P, remember, they move exactly the same together. They are a basket of stocks that are pricing in what's going to happen in the future. So, last year, everyone's like, oh my God, recession, all these gloom and doom economists. Hold on. All these gloom and doom economists last year are talking about how this recession and blah, 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 and debt and the inflation and the Biden and everything's such a disaster. And now the stock market is absolutely ripped because it's forward looking. And we've been in a bull market, and we're now month 14 into this bull market. And now the economists and Goldman Sachs are like, maybe that recession might not be happening. It's like, yeah, big shocker. If you've just been paying attention to the leading indicator, which is stocks versus those lagging indicators, right? You would have known this already, and you wouldn't be so confused. Right? So I think neither one of them have anything to do with momentum. You overlay momentum analysis on those indexes. So hard no. Sorry. Sorry, not sorry.
Mild disagree for me, Ravi. I'm not a hard no. I'm a mild disagree. I get his point. No. I get his point. He's trying to say that the Dow companies are more how would you put it? Maybe more of a leading indicator for economic activity as opposed to like the every company in the S&P, right?
Can you please throw one more time this S&P 500 and Dow overlaid with one another and tell me one is one thing and the other one is something else? Like, what are you guys like? What are we doing here? They're the same thing. Let's be serious. They're both leading indicators for the future economy, earnings, all that nonsense, right?
All right. Well, I bet you our guest has a take on this. In fact, she probably does. Oh,
bring her on.
And first off, investing heavy says he misses Strazza. Do you really?
Rude. Now that's rude. You want to talk about who's rude around here?
All right. Let's bring
Strazza
on our
was having
guest.
a moment. He was having a moment today in Hong Kong.
Callie Cox is an investment analyst at eToro. She probably has thoughts on this Dow S&P conversation. Let's bring her on the show right now.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Callie, what's going on?
What's up? So good to be here. I'm so excited. And yes, I do have thoughts on the Dow.
What's up, Callie? Welcome to the show. Let's hear it. Give it to me. Tell me where I'm wrong.
All right. So I think the Dow, so I have to caveat everything because I'm an analyst. I think the Dow is important, but I wouldn't take short-term moves as gospel because it's price weighted. I mean, it is an economic indicator, I think, but I would definitely trust the S&P over the Dow simply because it is price weighted. But it does contain big economically sensitive stocks. It's less tech weighted. It's more weighted towards your storied, old economy stocks. And I think it is telling us something here. But I think you just have to caveat it a little bit. I mean, luckily, I'm seeing signs outside of the Dow that the economic trade is back in play, but I get a little wishy-washy on the Dow these days.
All right, so I'm going to give Callie some credit here, something that Spencer failed to bring up in his bad points that he was making. Callie brought up a very good point. There's a lot less technology in the Dow than there is in the S&P 500 or the NASDAQ for that matter. And I'll take it one step further. It's not just that there's a lot less technology. There's a lot less growth in general. So it's not that one is better than the other. I mean, right? We use them in conjunction. It's that when interest rates are rising and growth stocks are the underperformers, and some of those other old economy stocks that Callie was talking about are the leaders, which are in rising rate environments, the Dow's going to outperform some of those others. On the other hand, when interest rates are falling and there's a stronger bid for growth stocks versus value, the indexes that have a lot more growth, like the S&P 500 and the NASDAQ more obnoxiously, they're going to outperform in an environment that rates are falling. So if you're wondering which one is going to do better than the other, it's an interest rate story. That's what it is.
I think that's right. And, I do, like, if you look at the top 10 performers in the Dow over the past 9 days or so, since this 9-day winning streak started, you can see that a lot of different types of stocks are doing really well. I mean, I posted the top 10 Dow performers on my Twitter, so definitely go take a look at that. But, if you look at it, we see banks in the top 10. We see healthcare in the top 10. We see a material stock in the top 10. We even see Home Depot. It's a home improvement retailer. Like, totally bucks the narrative of the housing market that we're seeing these days. So I think that is telling us something. The underlying guts and themes that we're seeing are telling us something about the recalibration of economic expectations.
I love what you just brought up there. The story about home, real estate and housing. Home construction stocks are making all-time highs. Like, what are these people talking about?
I know, isn't it wild? I mean, it really questions the narrative that we've been talking about for a year and a half now. And I mean, to be clear, the housing market isn't doing great at the moment. It's doing better, but I wouldn't call the overall trend good by any means. But you're right. At the same time, I mean, we found ourselves, I say we, I mean the world, not necessarily we, but I think the world found itself on the wrong side of that trade there, going completely doomsday on the housing market. And then suddenly it turns out, consumers still want to buy houses and they're leaning more toward new construction.
Callie, can we talk about what I referred to as earlier, your trade of the summer, because it is sort of a summary type situation. You sent us over a couple of charts. You have your own index of beach stocks that you put together.
Nice.
That we love custom indexes here. So let's bring this up on the screen. Let's get it back up. First off, what is this index, and why is it not performing so much?
All right, so this is the Beach Stock Index. And when I say beach stocks, it's actually an acronym for booking, entertainment, airlines, cruises, and hotel stocks. I didn't come up with that acronym. I can't take credit for it. That was my colleague, Ben. Shout out, Ben Liedler. But what this is showing you is that, again, we in the world I'm talking about, it was kind of offsides on this whole, revenge spending summer, hotback summer 3.0 trade. Starting this year, a lot of us including me a little bit, thought that we could be in a recession by the middle part of the year. And certainly when the bank scare happened in March, I mean, a lot of people got worried about the future of the consumer, and rightfully so. But now we're in the summer. We're hearing a lot of talk about Barbie and Oppenheimer. You know, we're talking about Taylor Swift and the Eras Tour. And Americans are spending money. So we're seeing that bleed into these travel and entertainment stocks. And as you can see, this has been the trade of the summer. Since Memorial Day, these stocks are up 18 or 19% compared to the NASDAQ's about 8% rise and the S&P's 7.
Yeah, and there was comments this morning. We haven't gotten to American Express yet, but they report earnings, and the CEO said, card spending made another being the key word there, new all-time high. People just keep on spending. So there's another chart too I want to bring up. First off, are these not that one? This one. These are related.
These are related. So this chart you're looking at is actually expected profit growth by S&P 500 industry. And industries are one level deeper than the 11 GICS sectors that we typically look at, the financials, the technology, stuff like that. And I want to point out that when you look at 2024 profit growth, which is what the market is looking at, to be clear, I mean, the market is always 10 steps ahead from the data you're seeing today. But if you look at 2024 profit growth, media and entertainment and hotels and leisure, i.e. those consumer services stocks, rank in the top 5, top 10 of expected profit growth among industries. So I think the market is catching on to that. And a big story in the stock market has been these rising earnings expectations. And this is where expectations have been getting better.
How forward looking is the market like right now, right? Because sometimes those earnings projections are priced in and sometimes they're not. Right.
It's a good question.
Yeah.
Callie, what do you think?
Yeah, so I think it's hard to really pinpoint. I mean, I'd say right now the market is a little more forward looking than people think. There were a lot of talks about how valuations were spiking, even now, maybe like a month ago. And you have to remember that at the beginning of a bull market, valuations tend to rise first because prices rise first. And it's because the market sniffs out these better earnings estimates over the ledge or over the profit recession that we see ourselves in right now. And earnings data in 2024 shows that. And we're starting to see, some earnings catch up to those valuations here, and certainly projected earnings catch up to those valuations. So, I mean, to sum it up, I think the market is looking ahead into 2024.
Beyond a potential recession.
So what do you think? So what, at least 6 months, 6 to 9?
Well, we're in July right now, so I'd say at least 5 or 6.
All right, 6 to 9 is.
But I think the market is basically.
I've always been in the camp. 6 to 9 is probably a good window.
Yeah, we'll say 6 to 9. But I think if you take a step back, the market is basically discounting 2023. They're saying, I don't think we'll hit a recession this year. Let's look into next year. We're feeling pretty good. I mean, where we sit at eToro is that we've been a little more optimistic than the average shop on the economy going back into the middle of last year. And, let's be honest, the Fed still has the economy in a vice here. I don't think we're out of the woods yet. There's still a chance of a recession out there, but it's good news that we're seeing so much progress in inflation. And I think the soft landing is still in place. And I think up until recently, the market wasn't on the same page. And now it's kind of coming into the same lane with the Fed, that rates can stay high, but maybe we do avoid this recession and get inflation down. It seems improbable still, but it's happening.
Why don't we throw up the performance, the sector performance up there on slide 1? Callie, you brought up an interesting point about valuations tend to spike early in the cycle. You know what I know? I don't know much about valuations, but what I do know is that when you go back and you study bull markets throughout history, what you tend to see is that the early winners in those cycles, the early leading sectors, tend to be industrials, technology, consumer discretionary. And what do you know? The best performing sectors this cycle, so far, we are month number 14 of this bull market. Since the new 52-week lows list peaked last June, the best performing sector is consumer discretionary. The second best performing sector is industrials, and the third best performing sector is technology, which is perfectly consistent with the types of sectors that tend to be the leaders early on in bull markets. I don't know what everyone's so surprised about.
Yeah, and I'll note too, I always think about bull markets when it comes to expectations. I mean, the market also trades on expectations. If you're expecting a terrible economy and a tough recession and you get slightly better news, maybe we see slower growth in a mild recession, then that's going to beat your expectations and you might recalibrate your portfolio on top of that. And I think that's what we're seeing. I mean, the economy is not gangbusters right now, and it's certainly, the trend is not great. Things are slowing. The Fed is intending to slow things down to get inflation back under control, but it's not as bad as people were expecting.
Shocking. And let's remember who
I
got it the
know.
most wrong: the sell side and economists, right? Again, what else is new? Right? So by the time the sell side and the economists are sitting around telling you how great things are, that's when we want to be feeding the ducks.
Yeah, and I do feel a little
Why?
sorry for them. I mean, it doesn't. Okay, maybe I take that back. But it's been a really hard cycle to read. Nobody has read it right. And on one hand, that's interesting. It makes a market. But on the other hand, I mean, survey-based indicators when it comes to economic data have been so far away from what we've seen in the hard data. Going back to that vibe session, confidence falling, nobody feeling good about the economy around them, but at the same time, the consumer's financial situation broadly has been.
Callie, you're talking to clients and such, and I always just am curious, what is their sentiment in these what is their tone in these conversations? Are they asking you like, how can we be up this high? I don't understand. I'm pulling my hair out, or is it like more just going with the flow?
Good question. Well, we are talking to clients. I'm in touch with our high equity customers quite a bit. And there's still a lot of disbelief in this rally. It doesn't feel right. And I can totally empathize with that. What we tell customers there is bull markets tend to not feel comfortable in the first year, yet the S&P rises an average of 43% in the first year of bull markets, at least in bull markets since 1950. So, you have to reckon with this. And this is what makes a bull market so tough to, reconcile in your portfolio. The economic situation is not fixed yet. Inflation has made a lot of progress, but we're still not back down to that 2%. The Fed has a lot of ammo to keep rates high at the moment, but it is really, really hard to fight a bull market. So that's why we're taking a barbell position. I mean, this is what we've been talking to our clients a lot about, the fact that investing isn't black and white or buy or sell. You don't have to step all the way out of the market if you're feeling uncomfortable. Maybe hold on to some quality risk here. A recession is still a probability. So think about the companies within rate sensitive sectors that could survive a recession. In fact, I think that's why we've seen big tech do so well this year. So, we're in that barbell stage. We really like that middle ground here. I know that's a little wishy-washy, but you can't.
Callie brings up a great point. Bringing the heat today, Callie. Thanks for being here. You bringing up the performance of the market at the beginning of bull markets and how strong these first years are, because bull markets are born from extreme pessimism, right? So it's not that Carvana's up 1,300% because their management made such great decisions this year. It's because everybody came into the year so short, right? Stocks and markets don't move up or down based on earnings or fundamentals or the economy. It's based on positioning. And we're coming off last summer some of the most extreme pessimism for stocks that we've ever seen in history. So from that pessimism comes that unwind, maybe things aren't so bad. Holy crap, I need to cover my shorts. And all of that happens simultaneously. And what's the outcome? You're seeing it.
Yeah, we're 9 months into what looks like a bull market.
I'm going with 13. I'm going with 13, Callie. Well, you're talking about, you're talking about what, the October lows in the S&P? Right. But by the time the S&P 500 made its low in October, there weren't any stocks left still going down. Most of the stocks had already bottomed in Q2, right? So At the index
Yeah.
level, sure, but at the end of the day, it's a market of stock, right?
The indexes exist so that we have them to measure the market, right? That's
The
right.
indexes exist to confuse investors because investors are way too lazy to go chart by chart, stock by stock.
Yes. We're not all like you, JC. I can't spend 2 hours in the evenings going over 500 charts. But I don't.
More than that,
luckily, I only need to go look at one. It's kind of the point, right?
Right, but that's good because
This is the technician speaking,
it distracts investors. So those who actually take the time to count instead of waiting for their stupid computers to tell them that the stocks are going up, right? It gives those people who are put in the work an advantage, and we see it every cycle, by the way.
Guys, Callie Cox is an investment analyst at eToro. The link to her Twitter, someone asked for it. It's in the chat and description. Also, she does a good newsletter on LinkedIn. It's called The Bottom Line. That's in the description as well. Callie, always a pleasure to talk to you. Thanks for coming on this morning.
This was
we
great,
would love to have you back on.
Loved it. Good facts.
Yeah, thanks for having me. This was so much fun.
Live session.
Happy trading.
Happy Friday, happy trading, happy summer, all that stuff. That was great.
She's good.
Oh yeah, she's a frequent frequent flyer maybe in the chart report. She's featured in there quite a bit actually. She's a great follow on Twitter.
Bringing the heat this morning with the fun facts. I like it.
Yeah. No, I've been meaning to bring that up now for a while with you, right? Like the indexes exist because like they're measuring sticks. They're rulers, right? That's why we have them.
No, they're not.
They are.
They're not. They're not. Us as humans, the way we're hardwired is to look for shortcuts, right? Like we do it subconsciously. We're always looking for hacks. We're always looking for ways to do things easier. And that's perfectly natural. It's perfectly normal. But in the stock market, if you fall prey to those human evolutionary traits, you are going to be with the herd and you think that the S&P 500 is the stock market or whatever, and you're going to be very confused when stocks are ripping. But if you had just taken the time to see what's happening underneath the surface and look at the sum of the parts, because it is a market of stocks, not the S&P 500, JC. It's a market of stocks. And if you took the time to actually look at the stocks instead of just being lazy and looking at one index, you would have known that the stock market bottomed in June, and in October, you wouldn't be like, oh my God, I can't believe the market's up. You'd be surprised if it wasn't up, actually.
All right. Let's bring on Kimmy Sokoloff. Let's talk some actionable stuff, some actionable trade ideas. She talked about Target yesterday, and then she went and traded it, and it worked out for her. Let's talk about that.
Shocking.
Yeah. What's up,
guys?
Kimmy Sokoloff. Have a day, girl. Have a day.
The second short trade in Tesla helped. That's about it.
What I would love to get your thoughts on because it's been on the list to bring up. We haven't talked about it today yet. Is Siri, SIRI? This stock is in the middle of an epic.
Don't even ask. I don't even know, and I should have held it to the new high 590. But it's such. Sorry, junkie name, whatever it is. I don't know.
You call it what it is. Call it what it is.
What it is. Whatever happened. I had alert on this. I had alert at 560. And I showed everyone my chart. I go, I don't even know when I put this alert on. I don't remember the last time I looked at Siri.
Could have been 20 years ago, Kimmy. Could have been 20 years ago.
So I said, it could have been like 5 years ago I have this alert on. So I said, everyone in the room, I'm like, hey, if you have an interest, has potential up to 590. I think one other person in the room did take the trade. I threw it on because I'm like, listen, I'm not going to say, hey, I'm buying this. It's it's very hard to say like sometimes names like this, but bought in the room, whatever. I only trade for a little bit, but actually someone did better than me, caught it. Jason, shout out to Jason.
Can we just talk about for 1 second? I don't know if you guys realize this. Both of you are like hating on Siri and Spencer's hating on calling it a junkie. For the record, it's a $30 billion market cap.
Yeah, I don't know why.
Yeah, but without Howard Stern, it's like $10 billion. So.
Right.
Oh my God, are we gonna do that? Are we gonna talk about the S&P 493 like a bunch of morons? Also, like that's the the Lakers ex LeBron aren't
Come
that
on,
great?
Terrestrial satellite radio, is that really what is that? That's what we're into now? Okay, whatever.
$30 billion, Spencer. That's not nothing, dude. You bring up way junkier shit here
Wow,
on the show.
that's like 3 Dogecoins. Holy cow!
That's almost.
Almost.
Yeah.
It's
I see
amazing.
what you did there, Spencer. I see what you
Anyway.
did there. I see what you did
All right,
there.
Kimmy, what's on the radar this morning?
It's sometimes well, today's Friday, option expiration. It's monthly expiration. It's gonna be a lot of shenanigans and things like that. So it's kind of almost like how they call in options like Lotto Friday. I'd keep your position small and see some Fridays we do well and some Fridays it's 50-50. So I have a STLD on my radar for potential short. We'll see. I also have Peloton is near the 200 day. So I am going to keep an eye on that. It's below it, but we'll see. A lot of names are stuck. Like we traded Target yesterday. It's still stuck under that 135 area, right? 3M. I recommended it 2 days ago, 3M at like 102.60 for a move to like 104. It keeps staying around 104, 105. It's stuck at 104. Am I saying it right? Or is it 205? Sorry. I have to look at my screen. Yes, 105. So, these names are like stuck in these patterns and not pushing through. Pepsi, we traded yesterday, finally broke through, right? We'll see. RIVN is gapping up today. We'll see if that holds the gap. Maybe there's a push to 28 in that. Today's a tough day. I think it's, especially its monthly expiration. So we'll see.
Yep.
I do have we've had an outage down here in Verizon, just letting everyone know.
Ooh.
And I got to let the room know. Verizon got back up. Now internet's down. So I am on a mobile hotspot. So hopefully it stays.
Oh, man. Trading on the hotspot. All right.
No TV, no internet, nothing.
Kimmy, I like your
3 o'clock.
I like your thoughts on the 3M there, one of the larger components of the Dow Jones Industrial Average, the world's most important index. I don't know if you heard, Spencer. And one of the underperformers, but it's an industrial, like S&P Industrials, not Dow Industrials. S&P Industrials, which is one of the best performing sectors. You're getting rotation more recently into industrials, and 3M has not been participating. So it's been at that support. So is it going to completely fall apart and complete this massive top? Or is it just going to find support down near the former lows and continue higher because this is a bull market? My suspicion is the latter.
Yeah, we'll see. We'll see. It's I told them they could trade it up to the level, like 104. So I recommended 2 days ago at like 102.60, and it was a nice little trade. Some people in the room did take it. But now you got to see if it gets that push. Otherwise, it's going to fail. So we'll see.
All right, praying for Verizon this morning. Not the stock.
Verizon hangs on because we have no internet, no TV, no nothing.
Kimmy, good luck trading on the mobile hotspot. And
thank you.
Kimmy's room. The link's on this. The QR code's on the screen. The link is in the chat and description. She's live trading every single day, calling out her trades, calling out winners. There are people watching right now that always leave our show to go into Kimmy's room. So you can be like them and make money, or just watch our show to the end and go to Kimmy's room out. She's there until like noon every day. Just live trading, calling out winners, making money. Check it out. Okay.
Can we just circle back on that 3M one more time? Throw up that chart 1 there. This is an important one, guys. Kimmy's looking more short term. One of the things I love about Kimmy and the things she does, she presents great trading opportunities on an intraday basis, even some swing trades. But in addition to that, if you have longer term portfolios, so I've got my day trading account and I've got longer term portfolios, just because there's a day trading opportunity doesn't change the fact that there might be longer term opportunities. And we've certainly seen that. I think 3M is that, guys. When you look at the Dow Jones Industrial Average and you look at the components, 3M is on there. Also, it's an industrial stock, MMM. It has a market capitalization of $57 billion. Look at that former support from 20 years ago, right? Former resistance from 20 years ago. That's turning into support. So if this was a bear market, if this was going to be a complete disaster and the end of the financial system as we know it, like these perma bears keep telling us, then this support is not going to hold and we're going to completely fall apart and head down towards the 2009 lows. But I don't think the perma bears are right. Quite the opposite. This looks to me like a good opportunity. I don't own any, full disclosure, but on a breakout, we start holding above 105, 106. I think it's got a shot, Spencer. I think it's got a shot.
All right. I can't tell if Joe is making fun of me in the chat. He might be, but he's asking if we can do earnings. Yeah, we have a couple here that are probably worth mentioning. So let's just do that real fast. There's not that many. It's a Friday. There's not that many, but we'll do some earnings right now. I want to do American Express real fast. AXP top line beat. I'm sorry, top line miss, bottom line beat. EPS beat estimates. Sales did not. But most, and then they reaffirmed their guidance for the year. But mostly just because of what the CEO said. I'll repeat it again. Card member spending hit another all-time high, driven by double-digit growth in U.S. consumer and international spend. Travel and entertainment spending remains strong across consumer categories and geographies, up 14% year over year on a currency-adjusted basis. So they're saying the consumer is strong and they got money and they're spending it. They're spending it with us. They're using our cards. And there you go.
I mean, isn't that just like a consistent theme though?
Well, yeah,
right? Like Visa, MasterCard making new all-time highs.
Yes.
By the way, American Express is great. I have the Platinum American Express. It's fantastic. The customer service, like if you need like reservations at a restaurant that's tough to get, like they make it for you. It's pretty great.
Yeah, isn't that? Yeah, that's sort of like the whole perk, right? Is
the concierge,
yeah,
and the points, and you
get
the points. We put everything on our Amex. Are you kidding me? With 3 kids under 3, we're not doing much traveling these days. But my wife and I start traveling again. Are you kidding me? We're gonna be flying first class everywhere because everything goes on the Amex. So the fact where I'm obnoxious about it, my wife's like, "Oh, we need to write a check. Put it on the Amex."
Yeah. Yep. That's fun. Anyway, the stock is down this morning. I'm not really gonna pretend to know why, but.
I do like it when you pretend to know why, though. That is always adorable.
Oh, it's possible that, a top line revenue miss, but yeah, I don't know. ISRG, Intuitive Surgical, this one is also down this morning, and their numbers, again, as compared to the estimates, were good. They beat on the estimate, they beat on the EPS, and they beat on the sales. But again, just look at the chart. Maybe that's the point, right? Is just a strong uptrend here.
Throw up slide 1 here. If you're wondering why the stock is down, this is why it's down, folks. I don't know what their earnings are or their lack thereof or their revenues or whatever fairy tale their CEO is saying. All I see is that prices are now back to those former highs. And one thing that we know about the market is that at these prices, there are more sellers than buyers for Intuitive Surgical. I'm sure they have their perfectly good reasons why they're selling at these prices. But if the market has proven anything, is that there's more sellers than buyers at these prices. So if you are surprised that there are still more sellers than buyers at these prices, it's only because you haven't taken the time to look.
Well, in that case, maybe that same logic probably applies to our next one too. The last one that we do is CSX, right? So the numbers are what they are. EPS in line, sales miss. The stock is down this morning, but yesterday the stock hit $34, which is frankly in this area of resistance. So, yeah, same idea there on CSX.
Yeah, CSX is kind of just like a no man's land. So it's not so much that it's resistance as it is kind of in the middle of the range, right? So Intuitive Surgical is very clean. Like we literally got up to the resistance and are failing there. Perfectly normal. Here, we're just in a messy range. It's just a mess. If volatility was higher, I'd be looking to sell the wings, collect some income, sell some, sell a strangle or something like that. But volatility is just non-existent right now. So you're not getting paid to play. So for me, it's just one of those, all right, this railroad's not really doing much. Take a look at CP, though. Canadian Pacific. There's the opening bell. If you're looking for some railroads, throw up slide 1 there, Spencer Israel. This is an interesting one. Looks way better than CSX. As CSX is not even pushing up against those former highs, still in that mess. Look at Canadian Pacific. I think this ultimately gets going. Hasn't gotten going yet. If you're looking for more Canadian railroad exposure, this one will get you done.
Yeah. Didn't they just are they the ones that bought KSU? Kansas City. So do we know?
No, that's CNI. I'm pretty
what's
sure.
The difference? They're all Canadian railroads, is all I know.
Right? I'm pretty. Is it CNI?
You might be right. I don't see it here. I could probably. You know what? I can look it up right now. Let's see.
Whichever one it is, they kept it in the name. Didn't they keep it? Is it Norfolk Southern? No. I think it might be Norfolk. No, it's not Norfolk Southern. Which one?
Kansas
Which one is
City.
it?
Oh no, it was. I was right. It was.
Oh, you're absolutely right.
Yeah,
it's Canadian Pacific Kansas City. I knew they added it to the name, which I thought it was pretty funny.
Weird.
So it's a Canadian Kansas City company, right?
These things are cool. They move the same. What's the difference, JC? Thanks, Fonz. Nice try.
What is the difference? Samesies, right?
Real fast, if we can bring up that chart of Sirius SIRI, this thing is in the middle of a short squeeze, short interest of somewhere in the ballpark of 34%. I think 4 circuit breaker halts yesterday, and of course, I love the analysts coming in this morning, JC, on Sirius, coming in with their downgrades, firing, saying valuation.
It's comedy hour.
Three downgrades. 3 downgrades this morning. Pivotal, Evercore, and Deutsche Bank. As if that makes a difference in the short squeeze, but whatever. This thing went from $5.50 to $8 yesterday in like an hour. Anyway, I just thought that was fun. Chart is wild.
Sell-side analysts are hilarious.
Please be careful in stocks in the midst of short squeezes. Okay. What else was
as opposed to other stocks that are not in short squeezes, so you don't have to be careful with those?
I mean, just higher volatility, just because you almost have to give yourself more breathing room on those because they move so fast. But that can also magnify your losses. So I don't know. And also, all I'm saying really is just don't short a stock in the midst of a short squeeze unless you know what your out is, or don't ever short unless you know what your out is. But especially so in short squeeze. Okay.
Can we get to the hot corner because we got something juicy?
Oh man, I'm so sad. I'm so sad Steve is not here for this because this is like he's missing all the fun on the hot corner today.
For the record, Steve is having plenty of fun in Hong Kong right now.
But this is a fun one.
Hot corner. So hot right now.
All right. When he is not managing the New York Mets, Stephen Cohen runs a hedge fund. It's called Point72.
Throw the chart up. I got a blackout.
I got black too. 1 second. I'll get it up. Anyway, Point72 coming in hot. New stake in not just any stock, the stock that Steve Strazza happens to love, Chewy. 5.8% stake?
So Steve Strazza used to work. So Point72 is the old SAC Capital. Steve Strazza used to work there. Steve Strazza is Mr. Connecticut. This company is like very Connecticut. He loves the stock, Chewy. So Strazza would be doing backflips right now, getting all excited, telling us all kinds of fun facts about this particular filing. What's really interesting is a 13G filing versus a 13D. What that means is that Stephen Cohen and friends is not really looking to make any changes. They're not really looking to, do anything. They just want to own it. They're happy with what's going on there, which is interesting. It's not a 13D, it's a G.
To quote a famous investor, they like the stock. They just like the stock. And so new stake, 5.8% in Chewy. There's the chart. Very interesting. You don't see these too often from firms like that. So anyway, that was for fun.
I mean, listen, this is a fun one. Not all these are fun. This was really interesting. This Stephen Cohen buying a Strazza uses it. Strazza's a cat lady. Strazza gets all this cat food from.
I live in an apartment and there's basically perpetually Chewy boxes down by the door. Just people getting Chewy delivered to them. Just every day there's Chewy down there. That was a fun one. That was a fun one, guys. The hot corner is a free daily note that we send out highlighting all the biggest trades from Washington to Wall Street to the boardrooms themselves. If you want to get that note, email me Email us, not just me. Email us. The email is on the screen now. It's questions. It's stock market media. I'll have a landing page for you guys next week. Don't even have to send an email, but for now, just email us and we'll get you on the list for the hot corner. Again, goes out every day, Monday through Friday, and the best part is it literally takes like 10 seconds to read. I opened the hot corner today, read it. I saw Chewy, I saw the steak, and I left. Right, 5 seconds, and that was it. It was awesome.
The BlackBerry options activity was interesting too. Huh?
I see. I didn't even what 5,000, 5,000 call
5,000
options
September.
Yeah.
September. So we're in July, August. I mean, it's less than 2 months away. That's pretty aggressive.
Yeah. Did you see that BlackBerry movie? Probably not. I didn't see it. I kind of wanted to.
There's a BlackBerry movie?
They made a movie about like the origin story of Research in Motion and the BlackBerry.
Really?
Yeah.
I like those kind of movies, like
Me
the
too.
McDonald's movie, like The Founder. I thought I enjoyed that.
Me too. I meant to watch it and I didn't, but I'm going to one of these weeks.
Where is it on? Is it on Netflix?
I don't even know. It might be on Amazon. I honestly,
you know what it's called?
Here. Yeah, I'm Googling it. It's called BlackBerry.
Very creative.
Where can I watch it? I don't even know.
So for those of you guys who, for you youngsters, back in the day before FANG, this was an original FANG stock. They used to be called the Four Horsemen, and it was Research in Motion, which ultimately became BlackBerry. They just changed the name, same company. So it's Research in Motion. I think Google, Amazon, and Apple, I think was the is that about right? I think that's right. They were the Four Horsemen.
What, like 20 years ago?
Like 15 years ago, 16 years ago.
Interesting.
Yeah, Spencer was going to his junior high prom or something like that at the time.
I didn't realize that. Well, yeah, actually, that's right, because BlackBerry was like everybody had one.
Yeah,
in 2000, in 2006, 7, and then like one day, nobody had them anymore.
Right. Yeah.
It was like everyone just decided to not have a BlackBerry and to have an iPhone. Anyway, Carrie says that they watched it the other night and they loved it. So
you guys are a couple of nerds. Let me tell you, Carrie and Brett, the two of you sitting there watching the BlackBerry movie. I could see it. I could see it from here. You guys are out of control. Not drinking any wine either, I bet. Just sitting there drinking water or something. The two of you.
What's wrong with water? Hey, real fast.
It's just funny.
Real fast. Let's do the chart report, and then we have some other things going on.
All right, so real quick. Underrated part of the chart report. I'm stealing Spencer's thunder. Did you have something you wanted to say? Because I got a good. I was
going to know the chart of the day.
Okay, better than the chart of the day. Underrated feature of the chart report is the quote of the day. The quote of the day is one of my favorite parts of the chart report. And think about that, because I love the chart report because it's all charts, right? And here I am, Mr. Chart Guy or whatever I'm called. And I think my favorite part might be the chart of the day. Shout out to the late, great William O'Neill, rest in peace. A stock chart is simply a picture of human behavior. I like that. That's what we're doing here, guys. We are taking advantage of human flaws. We are exploiting human weaknesses for our own profit. And if you haven't figured that out yet, and you think that we're looking for companies with strong fundamentals, like you are the people who we're trying to take money from.
Yeah. I mean, it's hard to argue with a guy like William O'Neill. You know what I mean? So he wrote some of the most influential investing books.
You want to know a fun fact, Spencer? Fun fact, Investors Business Daily and William O'Neill's work was my first introduction to technical analysis. There would be no all-star charts. There would be no stock market TV. We wouldn't be here talking about this if it wasn't for William O'Neill. And I'm not like an O'Neill guy, like per se, like someone like Joe Fahmy and a lot of other friends of ours are like O'Neill guys. Like I'm not an O'Neill guy. I'm more of a Murphy guy. But nevertheless, O'Neill, one of the most influential people in my entire life. That is a fact.
There we go. All right. I want to go back up to the chart of the day, and everyone freaking out about the 2.3% drop in the NASDAQ. because when the market goes up every day, it seems bad, right? 2%, in a vacuum of the last few months.
This
But
is it. That was it. Sell everything.
that was the top right there. Anyway, I didn't realize this, but it was the second worst day of the year. Only February 21st was worse. So, and you can see what happened after that on the chart. Yeah. I just thought that was really good. Good perspective in the chart of the day.
Why don't you throw the Eric Balchunas chart up there that you mentioned earlier in the show?
Oh yeah, is that where? No, I saw. Okay, I saw this on Twitter. That's where I saw. But yeah, it's so cool. It made the chart report.
But for
Excellent.
some of you guys who don't have as much time on your hands as Spencer and didn't catch it in real time, the chart report does a great job of highlighting some of the best ones, right?
Yeah. Look at that total return: the diamond versus the SPY, dating back to inception. 25 years ago.
Is that total return or is that price
That's
only?
total return.
How do you know?
Because it says it.
Where?
Up. It might be hard to see, but up above.
Up above what?
Like above the chart here. Total return. Price change. It's hard to see.
Oh, I see what you're saying. Total return. Holy shit. Look at the difference between total return and price change. Wow.
Yeah, I know.
Wow. And this is a great, this is a great example when people are like, oh, real estate is the best investment. Real estate is a terrible investment. Owning real estate, owning your own house is a luxury or a headache, depending on what side of the where you're at.
It's a form of consumption as well.
For me, what is it? The American nightmare, not so much the American dream. But man, when you look at let's just go over, because if you can't see it, let me just go over what these numbers are. So on a price change basis, since the inception of this goes back to like the late 90s. Right? Mid to late 90s.
Yeah.
You're looking at 98. The Dow's up 350%, S&P's up 370%. So 300 and something percent since then. On a total return basis, when you include dividends, it's closer to 700% return for the Dow, 650% for the S&P 500. Wow.
Right. So on a per share basis, the SPY has beaten the diamond by 20 percentage points over the course of 25 years. But when you factor in the dividends, it's flipped the other way, right? The diamonds has beaten the SPY, which is a very interesting
because they're better companies that pay more dividends, and that's why it's the best index in the world.
I would love to see a performance of the diamond with that, like, with stripped of Apple. You know what I mean? I would love to see. I'm just so curious because Apple is such a monster.
I know, but Apple hasn't been in the Dow that long.
When
was Apple added to the Dow?
I know. It's only been a couple years, right? So that's why I would love to.
It hasn't been that long.
Yeah, I know. Like, for example, like Berkshire has not owned Apple for that long either.
2015, so 8 years ago. It was longer than I thought, actually.
Berkshire's only owned Apple for like the same amount of time, right? And now it's the largest holding, right?
Yeah, but it's still a small percentage of Berkshire.
But it's Berkshire overall, but it's the largest holding in their 13Fs every.
It's their largest holding in their stock portfolio, but their stock portfolio is less than a third of Berkshire Hathaway. What, 12, 15%?
Sure. But it started off. Apple started off as like a small stake, and it's ballooned because of the performance. So my point is, Apple is such a monster, can take the indexes with it. But anyway, fun chart from Eric. I did not know this. Definitely puts things in perspective. If you had told me this, I would have said, no way. Growth has outperformed over the last 15 or so years, and for most of the time at least. And the SPY's got way more growth than the Dow, but here we are nonetheless. So it's a very interesting chart there.
Great report today. And by the way, last one, this Callie Thomas. This is something that you and I discussed earlier, where you were talking about how volatility.
Right. I did.
How volatility kind of dips. Is like low in the summer, maybe early in the summer, to your point. Like, you were right on that end, but in the summer is when volatility starts to spike, and that now is the time where historically that happens. Makes sense.
Yeah, like the bottom is now, so maybe okay. I'll credit myself. You were
right. How many times on the show do I say, Spencer, you were right?
Holy crap. It must be a Friday or something. I don't know. Anyway, that's awesome. Credit to me. Thanks for the
Yeah, but you're
bone.
not right anymore starting this week. Like, you're not right anymore. Now
thanks.
volatility goes up.
Thanks for the bone, JC. Guys, if you want the chart report, it's a free daily note. If you're not like me, spending all day on Twitter, there is a ton of great stuff posted on Twitter every single day. But Patrick actually goes through and compiles the best of it in a daily report. And the link to that is on the screen there. It's also in the description, right where it says the chart report under where it says free research. Okay. What else was on the list here? We have a few other scans maybe we should get to.
Dude, we got a couple more minutes before the little recess.
Yeah. You know what I wanted to mention real fast? I've sort of been observing this. There's this huge dichotomy, this huge divergence in like a lot of these growth names. If you just look at the ARKK and look at like the top 10, top 15 holdings in ARKK, some of those have really come back hard with a vengeance this year, like doubled or more. And other names have not at all, right? Like there are names that have been great since last fall, and there are names that have sucked. Like Zoom has sucked, right?
I bought it. I bought it this week.
Really? That's interesting.
Yeah. What do you think about that? I haven't told anybody. This has been a secret. I haven't told anybody. I bought Zoom. You think it's a bad idea?
Well, if you're thinking like it's a rotation thing, because like it does seem like every week another one of these growth names does go, and Zoom is almost one of the last holdouts of these pandemic darling stocks. And it's barely off the mat at this point, right? I mean, the all-time low, almost all-time low was $60, back in the spring. It's 70 right now. But I mean,
throw slide one up there.
Year to date, the thing. So if you're thinking is that, look, more and more of these things are going, and this one and I'm looking for one that hasn't gone, then yeah, I could get behind that. I don't hate it because you have an obvious out. Your out is $60. That's all.
I know. Yeah, my out is tighter than that. My out, if we start dipping, if we don't come back today, we start dipping below 70, holding below 70, then I'm out. I have an even tighter stop than that. Wow. But yes, if I own, because I'm in the derivatives, but if I own the common,
you're in the options. All right.
You know how I roll. It's all about efficiency around here, Spencer.
Yeah, that's right. Anyway, it just like caught my eye how just some of these have gone, and some just really, really haven't. And the Zoom in particular, Roblox as well, barely off the mat. I guess not. It's gone from 25.
Would you call this the COVID darlings? Would you call it pandemic darlings?
Yeah, pandemic darlings. Oh, for sure. Yeah,
I like that, pandemic darlings.
Oh yeah, definitely. There's a couple more, but then for every one of those, you get 3. DraftKings, Coinbase, right? Things that have doubled or more this year. So, anyway. Yeah, DraftKings has tripled this year. Okay, thought that was fun. We do every week. We are doing.
That's why Strazza didn't want to leave Vietnam, because he was crushing in DraftKings and some other stuff, and he's like, dude, I could just stay here forever and live off the dividends. He's like, if I didn't have any friends or family back in America, I'd just stay here.
Yeah. They'll be back a week from now. Actually, so every week we're doing a whole bunch of proprietary scans, and we publish those scans, and we use them for idea generation, right? So can we pull up one of those right now? Can we pull up what is this? This is the 2 to 100 club. This is something that you came up with, I think, JC. And the idea is it's trying to find stocks like the next big growth names, right?
This is specifically designed to find the next $100 billion company. That's it.
Right. 2 to 100 is referring to market cap. That's right. 2 billion, 200 billion.
And I appreciate you giving me the credit for this one. This one, as much as I hate to say it, goes to Howard Lindzon.
Oh.
Howard Lindzon and I are chit-chatting one day, and he's like, JC, we need to find the next $100 billion stock. That's the goal. And I started thinking, and I'm like, yeah, we do. How do we do that? Like, what's the way to do that? And he's like, figure it out, JC. I'm like, all right, I'm going to go figure it out. So I get the team together and I'm like, all right, guys, how do we find the next $100 billion stock? And it's like, well, let's eliminate like the stuff that's not going to scale, like utilities and consumer staples and like, you know, maybe some energy stocks, like eliminate all of the things that can't go from a small cap to 100 billion overnight. It's going to take too long. Not interested. What's going to be the next $100 billion stock? So it's very growth specific. These are biotechnology stocks, semiconductors, internet stocks, you know, solar, like just the types of medical equipment, the types of companies that can actually scale and choose. We call it 2 to 100 club, but the truth is the window is between 2 and 30 billion, right? It's between 2 and 30 billion in market cap, because even if it's 30 billion, it could still triple before getting to 100. So it's that sweet spot. And then we sort by relative strength and go from there. Because one thing that we have learned over many, many years is that in order for a stock to go to $100 billion in market cap, you're not going to see a lot of new 52-week lows, right? Not a lot of 52-week lows on the way to 100 billion. You need to, you got to make a lot of new highs. So one thing you see in secular uptrends and the next companies that become 100 billion, you see a lot of new 52-week highs along the way. Like that's just math.
Yep. So some names on the list right now that jump out to me. This is just in alphabetical order, so I'm just going down. Dropbox. Oh, FICO's.
It's not in alphabetical order. It's sorted by proximity to new 52-week highs. Oh, you know why? What? It's just that all of these stocks are making new 52-week highs. That's why it's
oh yeah, they're all zero. They're all zero. Yeah, they're all zero. They're all zero.
Like, wait a minute, that's not how we sort things around here.
They're all there. So
they're all zero.
Cyber,
all of them are making new highs.
Yeah, they're all making. So
I was told there was only 7 stocks, Spencer.
Robinhood, HubSpot, FICO, Pinterest is not one I look at. By the way, shout out to Kimmy. I have not looked at the Peloton chart for a little while there. I kind of forgot that stock existed. I'll be honest.
It's an exercise bike with an iPad on it.
She mentioned it earlier, and I was like, "Oh, there's one I forgot all about." Anyway, so guys, if you want to get these reports, this is what you should do. You should email us. Two things. Email us. I'll put the email back on the screen, or email us there, or call us and talk to Mary, and she can tell you how to get, because every day we're doing every week we're doing a half dozen proprietary scans, right? 2 to 100, follow the flow, minor leaguers, young aristocrats, Hall of Famers, all these scans that are trying to find certain things. So call us. The number is on the screen. It's 323-421-7910. Talk to Mary, and she can help you out on how to get access to these reports. No Airbnb diverse insight, although I am still long that stock. And it's been good this year. So, but it's been terrible last year. So I think I'm probably about flat in that one. Anyway, okay, let's do
little recess.
Actually, Fonz, why don't you bring up the Airbnb chart real fast? Just because we have it. I think my cost basis actually is like around right here, like 148, honestly. So cool. I'm back to scratch. That's nice. I bought this thing for like a longer term, but I'm not married. I'm not married to it. Definitely not married to this one. Would be willing to sell.
Can you throw up slide 1 there? Drugs in Chicago. If you're interested in diversifying into some Chicago drugs, throw that up there, Fonz.
Why Chicago? You just said because that's where they're based.
Yeah, they make drugs in Chicago. What do you? I don't know. If it was Milwaukee, it'd be Milwaukee, but it's not. It's in Chicago. What do you want from me? It's in the north of Chicago. Does that mean anything to you? What does it matter?
No, I'm confused about. So that's where they're headquartered? Is that what you're saying? I don't know what you're saying.
I don't know, man. They make drugs in Chicago, bro. I don't know what to tell you. I'm not.
What are you talking? I don't even know what words. Fine, whatever. I don't care. Moving on.
This is a company. It's a $250 billion company that makes drugs in Chicago. Like, I don't know what to tell you.
Like, just in Chicago.
I guess. I don't know. Maybe they do it in Afghanistan also. I don't know. Listen, the bottom line is this. We're at support, right? There you go. Rick lives in next to AbbVie. So are they making drugs there? Yeah, my understanding is, listen, maybe they're lying. Maybe it's a whole scam. They're not making any drugs at all. Wouldn't be the first time we see a scam like that.
Aren't they based in Boston? Every drug pharmaceutical company is based in Boston or New
North
Jersey.
Chicago, Illinois. Apparently, Rick Wamps lives in North Chicago, Illinois also. Do I have that right, Rick?
All right,
Can I
whatever.
get a witness? Can I get a hell yeah?
Moving
Can I get a
on.
hell
I
yeah?
don't
Anyway,
care.
the bottom line is I wanted to increase my Chicago drug exposure, and therefore I bought AbbVie at support. I like the rotation that we're seeing into healthcare. I like it, and this is the vehicle that I am using to express that thesis. That's all. No big deal.
All right.
Not a big
All
deal.
Let's
Rick
do some.
says yes. Rick says yes.
Fine. Today we all learned something new today. That's good. JC learned that the VIX bottoms in July. I learned that AbbVie makes drugs in Chicago. Let's do some recess.
All right.
All right. I just want to start off with saying, obviously, it's a big movie weekend. I will not be going to the movies this weekend. I unfortunately have plans going upstate. But yes, Barbie and Oppenheimer. I did sell my Mattel. I sold it on last Friday. So I'm out of that. More of a buy rumor, sell news type of situation. But I would not be surprised at all if you see a load of headlines Monday morning of just how big this movie did over the weekend. So there's that. What else did I have? I wanted to say, there's two more things I had on my mind to bring up. Oh yeah, one of them was rest in peace, Tony Bennett. Just saw that he died this morning or last night. 96 years old. That's a really, really good life. So rest in peace, Tony Bennett. And I forget what the third thing was now. Damn. Anyway.
I'm going to need some advice from people. So I am going to go to Dick's Sporting Goods. Dick's Sporting Goods. It's publicly traded stock, Dick's. And tomorrow is my daughter's 3rd birthday. So I'm going to go to Dick's and I'm going to buy a whole bunch of sports gear. I'm going to get cones because she goes to soccer practice now. So I'm going to get a whole bunch of cones, like the red cones. You can do all kinds of stuff with cones. And I'm going to get like pink soccer balls and stuff like that. Might get her some plastic golf clubs or something. Any thoughts, any ideas, shoot me an email, DM me on Twitter. Anybody with 3-year-old kids, anything awesome sports related that they find really useful. She's already got a glove and stuff. I might get her a new bat or something like that. Just so when she wakes up in the morning, she's got a whole bunch of fresh gear. So any advice would be much appreciated.
In that same vein, next Saturday, I'm going to a 1-year-old's birthday party. I've never been to one of these before, not since I turned 1. What does one get a 1-year-old?
Well, what you should do is you should get some booze for the parents. Is really what you need to do.
Oh, that's a good idea.
That's how to do it.
I'll be the only person that did that.
The 1-year-old don't need nothing. They're good. They need some food and a nap and a clean diaper. They're good. Get the parents some booze.
Oh, that's such a good idea. I might do that.
I've got I've got 3 of those.
I was thinking, do I get like a little inflatable pool thing for the backyard? Do I get them some clothes they're gonna outgrow in 6 months? Or I don't know. I don't know.
Get the mom like a nice buttery Cougar Shard, California Chardonnay, nice and buttery, and get some whiskey for the dad, and you're the hero.
Yeah. That's not a bad idea, actually. Not a bad idea. All right, guys. That's it for us here on the morning show, but stay tuned. We got 2 more shows coming at you today. 11:30, What the Fake? Ian and I will be joined by the goddess of grain, Angie Setzer. We're talking all about softs, all about wheat and soybeans and corn. And if you trade those markets, you definitely don't want to miss that. And then at 1 o'clock, I'll be doing a lunch learn. I'm going to be just very casually running through how I look at ETFs and like how I decide, what's good and what's bad about them, because there's a whole bunch of characteristics each ETF has and sort of how I analyze them. I'll be doing that at 1, so stay tuned for that as well. Thank you to our guest today, Callie Cox. Thanks to Kimmy Sokoloff. Thanks to all of you in the chat. As always, drop us a like. As always, email us, call us. The stuff is in the description on the screen. Thank you for the participation. And that's it. Have a good weekend. See you guys later.
Adios.
Run it.